Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. In today's video, I'm going to talk about the ongoing copper boom and some Indian companies that are emerging as power plays in India's copper industry. Used in everything from toasters to semiconductors to data centers, copper has risen in price on the global markets by more than 15% in recent months and is considered a crucial metal in the transition to a greener economy. In coming years, millions of meters of copper wiring will be needed to build the more complex grids that can handle electricity produced by decentralized renewable sources and balance out their intermittent supplies. The International Copper Association predicts that solar and wind farms, often spread out over large areas, require more copper per unit of power than centralized coal and gas-fired power stations. Electric vehicles, meanwhile, use more than twice as much copper as combustion engine cars do. And yet, a lack of investment in copper mines, the logistics and expense involved in mining, and geopolitics has meant that supply has been particularly tight in 2024. Most copper ore mines are situated in Chile, Peru, and African countries such as the Democratic Republic of Congo, all of which have endured political instability in recent years. Copper is emerging as the next indispensable industrial commodity, mirroring oil's rise in earlier decades. New forces in the economy, namely the advent of artificial intelligence, explosion of data centers, and the green energy revolution, are boosting demand for copper. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. Let's look at some Indian companies that are actively involved in the mining and extraction of copper in India. The first on our list is Hindustan Copper. Incorporated in the year 1967, Hindustan Copper was formed to take over from National Mineral Development Corporation (NMDC). It is the first Indian PSU and only vertically integrated copper producing company. HCL is engaged in various processes right from copper mining to the final stage of converting copper into saleable products. The company is holding lease of more than 80% of country's copper reserves. It has well-developed infrastructure facilities, vertically integrated operations, and wide distribution network with well-established customer base. The company has 5 plants located at Taloja in Maharashtra, Jhagadia in Gujarat, Ghatsila in Jharkhand, Malakjand in Madhya Pradesh, and Khitrinagar in Rajasthan. Hindustan Copper's combined refining capacity is 68,500 metric ton per annum for copper cathode and smelting capacity of 18,500 metric ton per annum. Its installed capacity for wire rods at Taloja plant is 60,000 metric tons. Coming to the financials, Hindustan Copper witnessed a substantial growth in net sales for half year ended September 2024 at 34.5%. EBITDA growth for the half year came in at 58.4% with margins coming in at 37.5%. Hindustan Copper has recently entered into agreements with Kutch Copper and Hindalco for the sale of its key product, copper concentrate, further strengthening its business. Shares of Hindustan Copper are up 68% in the last year due to strong operational performance and higher copper prices. Next on the list is Vedanta, a diversified natural resource group engaged in exploring, extracting, and processing minerals and oil and gas. The group engages in the exploration, production, and sale of zinc, lead, silver, copper, aluminium, iron ore, and oil and gas. It has presence across India, South Africa, Namibia, Ireland, Liberia, and UAE. Vedanta's other businesses includes commercial power generation, steel manufacturing, and port operations in India and manufacturing of glass substrate in South Korea and Taiwan. Presently, India accounts for 65% of total revenues, followed by Malaysia 9%, China 3%, UAE 1%, and others 22%. Vedanta derives 25% of its revenue from zinc, lead, and silver segment, 39% from aluminium business, 12% from copper business, 9% from oil and gas, 5% from iron ore segment, and 10% from other businesses. Recently, Vedanta entered into a gas sale agreement with GAIL Gas, which is a transition to natural gas, likely to be operational by the end of next calendar year and will lower carbon footprints by an estimated 47,292 tons of carbon dioxide equivalent annually. The company recently said it plans to invest around $500 million in its group company, Avonstrate, ASI, a global display glass manufacturer. Vedanta secured a 98% stake in ASI earlier this year. Vedanta reported flat revenue growth of 0.7%, while the operating profits were up by 15.3% for the half year of FY25. EBITDA margins also improved from 26.3% to 30%. Going ahead, the management has expressed confidence in achieving $30 billion in annual revenue and $10 billion in EBITDA in the next term by emphasizing on disciplined growth, operational excellence, and exploring value chain opportunities. Vedanta's stock is up 85% in the last 1 year on the back of strong financial performance. Third on the list is Hindalco. Hindalco Industries is a flagship company of the Aditya Birla Group. The company and its subsidiaries are primarily engaged in the production of aluminium and copper. It is also engaged in manufacturing of aluminium sheet, extrusion and light gauge products for use in packaging markets like beverage and food, can and foil products, etc. The company ranks among the top 5 global aluminium producers based on shipments and is an integrated producer with a low cost base and a strong presence across the value chain. Hindalco's copper division operates one of the world's largest single-location customs copper smelters. Hindalco produces copper cathodes and continuous cast copper rods in various sizes. The company derives 16% of its revenue from aluminium business, 19% from copper business, and balance 65% from its subsidiary Novelis. Hindalco's revenue contribution from India stands at 24%, whereas 76% is export revenues. The company has 50 manufacturing units spread across 10 countries. It has 17 units in India, 19 operational bauxite mines, and 33 overseas units of Novelis. Coming to the financials, net revenue for the first half of FY25 grew by 7.5% due to moderation of domestic economic growth on the back of reduced capex from the government due to general elections. Operating profit for the same period grew by 38.6%, with margins improving strongly from 11.4% to 14.7%. Going ahead, the management has guided for aluminium demand growth to be at 6% in 2025, with strong growth in beverage and aerospace industry. Copper demand can see a 9% growth rate in 2025. However, geopolitical tensions and market volatility pose risks to the economic outlook, and the company is cautiously optimistic about the future performance. Shares of Hindalco Industries are up 29% in the last year. The stock is down 15% in the past 1 month. Next on this list is Bhagyanagar India. Incorporated in 1985, Bhagyanagar India is engaged in manufacturing of copper and other copper products and alloys. The company is also in the business of wind power generation. Bhagyanagar India deals in copper products and has been a partner to its clients who are primarily original equipment manufacturers. The company has diversified into telecom products, solar products, and real estate, and has forayed in the non-conventional energy sector with a wind power project. Company's copper division plant in Karnataka has a capacity of 15,000 metric ton, while the wind power project has an installed capacity of 9 megawatt. Bhagyanagar supplies copper products to various OEMs such as Lucas, TVS Limited, Miko, Commutator, MV Solar, Amar Raja Batteries, HPL Knife, and many other leading OEMs. Coming to the financials, Bhagyanagar reported a growth of 13.3% in its revenues for the first half of FY25. Profit after tax fell by 86.5% during the same period due to lower other income. EBITDA margins also deteriorated. Shares of Bhagyanagar India are down 9.1% in the last month. However, the stock is up about 56% in the past 1 year on the back of improving operating performance. Last on this list is Kiri Industries. Kiri Industries is engaged in the business of manufacturing and exporting a wide range of dyes, dye intermediates, and basic chemicals from India. The company serves industries such as apparel, hosiery, automotive, carpets, leather, paper, home upholstery, and industrial fabrics. Kiri derives 54% of its revenues from domestic market and balance 46% from exports. The company exports to over 50 countries across 7 continents, including the USA, Argentina, Brazil, UK, South Africa, Italy, Spain, Egypt, UAE, Singapore, Australia, New Zealand, etc. Recently, the company has informed to the exchanges that it's acquiring 81% stake of Indo-Asia Copper Limited. Indo-Asia Copper Limited will become a wholly owned subsidiary of the company. The intent for the acquisition is the manufacturing of copper and allied products as well as fertilizers. The company has also received environmental clearance for its copper plant. The first phase of this project aims to produce 200,000 tons of copper, and the total capacity is planned at 500,000 tons. For the quarter, the company posted revenue of 540 crores, up 17% year-on-year. Meanwhile, EBITDA came in at 40 crores. The company's net loss stood at 15 crores. This decline was attributed to reduced demand and lower price realization in the dyes segment. The company's management has strongly expressed that Kiri's operations will transform with the copper project and it could garner significant revenue from it in the coming years. Shares of the company have stood up in the past few weeks following Kiri's results, declaration, and announcement of its copper expansion plans. So there you go. These were some of the companies that are taking serious efforts towards their copper business. Apart from the above names, there are some more companies involved in the copper ecosystem. These include Nava, Baroda Extrusion, Madhav Copper, among others. In conclusion, copper is rapidly becoming a critical component in the global shift toward greener energy and technological advancement. As demand continues to surge, driven by the rise of renewable energy, electric vehicles, and data centers, the challenges of meeting this demand grow even more apparent. The tight supply, exacerbated by political instability in key mining regions, highlights the need for increased investment in both copper production and mining infrastructure. As we continue to rely on copper for the transition to a sustainable future, it will become an indispensable resource, paralleling the importance of oil in previous industrial revolutions. In this context, India's role in copper mining becomes increasingly significant, offering both opportunities and challenges as companies strive to meet the growing demand. Investors should remain vigilant, conducting thorough research and keeping abreast of market trends to ensure they make informed decisions. Remember the challenges before diving headfirst. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. Have a profitable day and happy investing.